Here are 8 ways by which you can reduce your taxes as an entrepreneur or real estate investor without actually spending additional cash. The first one is timing of your revenue and expenses, especially with your expenses. If you find that you're in a high tax bracket year, you're making more money than usual, you can maybe shift some expenses into that year. How do you do that? Well, you can prepay your subscriptions. Any assets or repairs or renovations that you're planning to have or in the future years, take those expenses in the current year where you get the most bang for the buck for that tax deduction. Next one, number 2, is pay the kids. Hire the kids in the business. You are going to get a tax deduction for wages, paying your children, and they're going to be taxed at their lower rate. And the first $15,750 that child receives will be untaxed by the federal government because of the standard deduction. And by the way, you can pay them more than that, and they're likely going to be still in a lower bracket than what you're in. Next, I want you to consider finding business purposes and creating legitimate, authentic business purposes from the travel and the meals that you're already planning to have. We can potentially create tax-deductible business meals with your family members, friends, and spouses, as long as we can legitimately show an ordinary and necessary business purpose to these events. Number 4, the Augusta Rule. If you have an S Corp or partnership or C Corp, you can rent out your primary residence to your company 14 days or less. You charge rent to your company. Your company gets a tax deduction, but you don't have to recognize it on your 1040. You don't pay taxes on that rental revenue. So the cash leaves from the company into your hands. You get the write-off, but it's completely untaxed for the revenue. It's a fantastic way of getting a tax deduction without spending any more money. Here's another one, cost segregation. Let's say you have a rental property or a business property that you operate out of. You may find that if you haven't done this or you don't know what it is, you could potentially accelerate the depreciation on that property and get more depreciation in the current year, write off more of that property without actually having to spend any more on buying more assets. Number 6 is charitable deductions. So let's say we have some old clothing, and anyone can do this, or we have some leftover materials we no longer need. Instead of throwing it out, we can donate it to charity. And here's a really cool way by which actually you can save money in your business and reduce your taxes. You could potentially call Habitat for Humanity, and they'll drive over and pick up the assets from your rental property or any property, and they may be willing to pick it up for you. So instead of paying to rent that dumpster and paying someone to remove the old cabinetry, they'll remove it for you, and you get the charitable deduction. Now, number 7, you actually have to spend money, but I'm going to include this, and this is solar, because overall we're going to be reducing our costs and our taxes at the same time. So when you buy a solar panel, you get the tax credits, and if it's on a business asset of a rental or a business property, whether maybe you have your office or your warehouse, you're going to get to write off that panel. So you write off the panel and you get the depreciation, and you're reducing your energy costs over time. And finally, 8 is going to be entity optimization. A lot of you have never had an opportunity to really make sure you're optimizing the usage of your entities. So some of the things that we may consider to make sure you're making the most out of your entity structure is maximizing for qualified business income tax deductions, also making sure you're paying yourself the right amount of officers comp, and that officers compensation could potentially increase or decrease the amount of payroll taxes you're paying. And then there's the pass-through entity tax election that could potentially allow us to deduct more than $10,000 of state and local taxes against our federal taxes. And then there's the entity election, making sure we have the appropriate entity based on your situation. And then we may even consider doing a spin-off entity and additional entities to optimize your tax savings. And in all these instances, you're not buying additional assets, you're not taking debt, and you're not stashing your money away in a retirement account. Now, if you want to see how any of these ideas may apply to you, I suggest you go to prospercpa.com/opportunity report. It's prosper with an L, cpa.com/opportunity report, where I will prepare a personalized video based on a conversation that you'll have and a survey you fill out, showing you how these and many other strategies may apply to you and what they could save for you in taxes. Hope to hear from you soon. We got more great content coming your way, and happy tax savings.